Welcome to The Explainer. Today, we're taking a deep dive into Aditya Infotech's dense FY26 financial disclosures. If you've ever stared at a massive stack of corporate financial results and wondered what the actual story is underneath all that math, well, you're in the right place. We are going to take that raw data and transform it into a really clear, dynamic story of corporate momentum.
Now, before we get into the heavy numbers, let's ground this a bit. You probably know this company best through their flagship brand, CP+. They are an absolute titan in security and surveillance equipment. We're not just talking about some holding company here. This is the engine behind the cameras and systems that are literally securing buildings in your own neighborhood.
To make sense of all this, we're mapping out their financial health through 5 critical pillars. 1. Board meeting breakthroughs. 2. FY26 financial highlights. 3. Strategic global expansion. 4. Rewarding the shareholders. And 5. The auditor's verdict.
Okay, Section 1. Board meeting breakthroughs. Setting the stage.
Every great corporate story needs a clear starting point, right? And for us, that's May 27, 2026. On this exact date, the Board of Directors officially reviewed, noted, and approved the audited results for both the final quarter and the entire financial year ending March 31, 2026. This is the moment the data became official, basically locking in the baseline for our analysis today.
Moving right along to Section 2, FY26 Financial Highlights. The Fuel.
Let's just dive straight into the hero metric of this entire document. 42,208.12 million rupees. That is Aditya Infotech's consolidated revenue from operations for the full financial year of 2026. It's a massive top-line figure, and it immediately signals some serious market traction and scale.
But, a single number in a vacuum doesn't really tell the whole story. We need some context here. When we put that FY26 revenue back to back with the previous year's revenue, which was roughly 31,118 million rupees, the jump is absolutely undeniable. This isn't just a company maintaining its market share, it's aggressively capturing new territory year over year.
And the truly crucial point is that it's not just about bringing cash in the door, it's about what you actually keep. Their profit after tax grew from roughly 3,513 million in FY25 to over 3,679 million in FY26, so it grew steadily right alongside that revenue spike. That proves they have a highly efficient operational engine, turning top-line sales into real bottom-line value. So, Part 3, Strategic Global Expansion, the upgrades.
How exactly are they upgrading this engine to ensure future dominance? Well, they've been executing some very precise strategic maneuvers. In September 2024, they solidified their AIL Dixon joint venture. Then, jumped to February 2026, they incorporated a brand new subsidiary in Taiwan. And just recently, in April 2026, they locked in a 50-50 joint venture agreement with Orient Cables for manufacturing. They are systematically securing their supply chain and expanding their footprint.
Let's actually zoom in on that offshore move. We're talking about the newly incorporated, wholly owned subsidiary, Aditya Infotech Taiwan Co., Ltd. Setting up shop in Taiwan isn't just for show. It's a highly calculated insertion into one of the world's most critical hardware and technology ecosystems.
The explicit intent behind this hub is super fascinating. The board just approved an investment of up to $400,000 to fuel it. And its core purpose? Dedicated research and development for security and surveillance equipment. They are literally planting a flag in Taiwan to innovate and stay ahead of the curve.
Okay, Section 4, Rewarding the Shareholders, the output.
Let's look at how this massive growth translates to the folks backing them. First, how did they handle the capital raised from the public? Out of roughly 4,763 million rupees from their IPO proceeds, they have already successfully deployed 4,650 million. They've put almost all of that capital to work, leaving just a tiny fraction, about 113.66 million pending. That's some absolute follow-through on their promises.
But honestly, the absolute highlight for retail investors is the dividend. The board recommended a final dividend of 1.64 rupees per equity share. And since the face value of each share is just 1 rupee, yeah, you guessed it, that represents a 164% payout on face value. It's a crystal clear signal from management. We are profitable, cash generative, and deeply committed to passing that success right back to the shareholders.
Finally, Section 5, the auditor's verdict, the validation.
We need to verify the integrity of this entire growth engine,
right? Enter Walker Chandiok & Co. LLP, the chartered accountants who conducted a rigorous, independent audit of these consolidated annual financial results. Because in the corporate world, you can make all the claims you want, but these are the folks who dig through the ledgers to ensure the math actually matches the reality.
And their conclusion is what every single investor wants to see, an unmodified opinion. In plain English, that's a totally clean bill of health. It means no material misstatements, no hidden red flags, zero creative accounting tricks. It assures us that all those revenue and profit numbers we just looked at are completely reliable.
In fact, right in paragraph 3 of their report, the auditors state that the results give a true and fair view in conformity with the recognition and measurement principles. That single sentence is absolutely crucial. It gives shareholders supreme confidence in the overall financial health of Aditya Infotech.
So let's recap. We've got explosive revenue growth, highly strategic joint ventures, a brand new Taiwan R&D hub, and a completely clean, unmodified audit to back every bit of it up. Which leaves us with one pretty provocative thought. Considering these massive foundational investments, just how incredible will Aditya Infotech's growth engine rev in FY27? Thanks for hanging out with me for this explainer, and we'll catch you next time.